All right, everyone. So we're going to pick back up here with chapter 12 on stock scanning. And this is kind of an exciting chapter because, well, I get to show off the scanners that I built. Well, I say I in a very liberal sense, that I paid to have someone else build. So here we go. This is, so in the chat room, we go down here to scanners, and you can see we've got a couple of different scanners. Now, I will say that not all of the scanners are available to Warrior Starter students. Warrior Pro students will have access to all of the scanners. We also have new scanners that are going to be released soon on a couple of different strategies. So we're continuing to build these out. Okay, so essentially what I wanted just in a couple of, so what I was looking for, just to give you a little bit of a context, previously, in order to see what was moving in the market, traders needed to subscribe to a number of different services, depending on what you were looking for. So that would range in cost from $100 a month to $200 a month, sometimes higher, depending on which services you subscribe to. And I always, we had students who would join and they'd be like, wait a second, you're telling me that, I've spent this money on my education, and now I've got to go pay $100 a month or $200 a month over here as well to get the scanner data. And so, I had a development team that built out our chat room software for us, as you know, well, I don't know. And so anyways, when we finished the chat room software and we got into a place where we're doing more just kind of maintenance and small enhancements, I moved them over to working on these scanners. So you guys would basically have all of this as part of your Warrior Starter and then Warrior Pro experience. So the first set of scanners that we use are our gap scanners. And so the topic of this chapter is scanners, and what we're trying to find is the easiest way to find hot stocks before other people find them. And scanners are what really do the heavy lifting for us. So regardless of what strategy you trade, large caps, small caps, penny stocks, futures, cryptocurrency, it doesn't matter. You need a method of finding opportunities. Now, when I first got started in trading, well, when I was in high school, I was just buying shares of stocks that I knew, like American Ski Company, Cannondale Bicycles, U.S. Steel, American Electric Power. I wasn't going outside of what I knew. Unfortunately, on any given day, well, you couldn't really day trade those stocks. And because I didn't have a lot of money, for me to actually make money, I would have needed 100, 200% movers. And that's not happening on large cap stocks. That's happening in a different area of the market. So then when I got back into trading, when I was in my 20s, I started just Googling hot penny stocks to buy because I just assumed that that's what I had to trade. I at least at that point knew that that was a better place to focus than on the large cap or mid cap stocks. But inevitably, I got onto a million different email lists for, penny stock, hot penny stock, blah, 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 blah. That was not a successful way of finding stocks to trade because, of course, most of those emails, they're coming from like Panama and all these countries that are sort of far away or don't have extradition treaties with the United States. And I just knew there was something really sketchy about it. So I had to essentially develop a routine and a system of finding the strong stocks to trade each day. So in chapter 2, we were talking about a strong stock and sort of what makes a stock strong. Sort of on the basic level, we're looking for the imbalance between supply and demand. And the question is, of course, what comes first? Is it the stock starts moving? Is it the news catalyst? I mean, it's probably obvious, but it's the news catalyst that comes first. And then following immediately the news catalyst, the stock responds often with high frequency trading algorithms that start buying it and it spikes up, or start shorting it and it flushes back down. So finding stocks moving in real time ultimately is what I needed to do. And so what we have now are our own scanners that help us search the market. And so this scanner right here is a gap scanner. And so the gap scanner is searching for stocks that are gapping higher. Remember in chapter 5, we broke down and talked about what a gap looks like. And I showed you the gold chart, which gaps a lot. The stock or the ETF gaps up and then gaps back down. But today we had, well, let's look at costs, because this was one of the ones that I traded. So yesterday it closed at $6. Now, we would definitely call that a long body candle. It was very bullish. It closed right at the high. And then this morning it opened pre-market, I think around 10 and continued higher, but it opened at 9 a.m. or 9:30 at about 11.79 and continued all the way up to a high of 13.90. So this was obviously a gapping stock. It was our leading gapper in the entire market. If we look at the 5-minute chart, you'll see some of the nice opportunities that we had from yesterday, actually after hours, through to pre-market and then a squeeze at the open. Now it didn't end up holding up super well. It's coming back down, but it was still enough to give us some good trades. So when I first sat down this morning and I opened my scan, I saw that costs, I looked at the top 5 gappers, and costs I immediately was interested in because I had seen that it had made this move yesterday. So I was actually already thinking about it this morning. I saw it was gapping up here in this column, 94%. I saw that the float was 1.8 million shares. Now the float, this whole column is colored with this bright blue being something to, kind of draw your eye to because it's important. Lower float stocks are usually more volatile. Stocks with floats over 100 million shares, that's in white because those usually aren't as significant. And green is kind of in between, anywhere from 10 to 25 million, and then it kind of gets lighter as you get higher up. So 1.8 million share float is a very low float, as we know. The relative volume is 183 times higher than average, which is fantastic. The price is $9.33 as of right now, but this all looked good. Now I click on the news right here, and this opens our own website here where we can scroll down and read a little bit more about the company and then also see what the news headlines are. So back here to the scan, one of the columns that we're going to add or that we'll hopefully have added soon will be short interest. So we can see what percentage of the float is currently holding the stock short. That can be helpful because when you see a stock has a high level of short interest, which Cost does, it actually has a short interest of 43%. That is a reminder that this is a stock that could squeeze pretty dramatically. FinViz is a site that a lot of folks use. It's a free site and whatever. So on FinViz, the float shows as 1.37 million shares, and it's got 43% short interest. So the short interest on this is certainly good. So, and high. Anything, I mean, realistically, it's very common to see short interest that's on the lower side, 5, 7%, 10%. When you're getting above 20, 30%, that is definitely more significant. All right, so, and then we've got the total volume on the day. Now, once the bell rings, I don't really use the gap scanner anymore. I really use it I use it pre-market to help me find stocks that are moving pre-market. And then once the bell rings, I'm pretty much done with the gap scanner because it's not showing me anything new anymore. Once we know what the gappers are and we've built our watch list, then from that point forward, we're wanting a different method of finding stocks that are moving. And I talked about how we have this sort of radar, which is the scanner, which is searching the entire market for stocks moving right now. And so if we go back into the scanners window, the high day momentum scanner is the scan that's searching stocks moving in the market right now. Now the process of building the watch list, again, just in brief, is what I showed you there on costs. And I usually will go through just the top, and you can see, hey girl. I usually go through just the top, usually the top 5 or 10 gappers. I usually like to see the stock that I'm considering trading is one of the leading gappers in the market, because while this software is something that we built, it's also true that traders all around the world use these top lists built in usually to their brokerage platforms, which show them the leading gappers each day. So for that reason, I usually want to focus on the stocks that are at the top because those are the stocks that will be the most obvious. All right, so, and we'll get into a little bit more of building the watch list and specifically reviewing catalysts in chapter 3 of the Warrior Pro courses. But for right now, let's look at the high day momentum scanner. So this scanner shows us stocks moving up right now. Now the stock, Craig, for instance, let's look at that one. So what I see about Craig is that it actually hit the scanner on 3 scans at the same time. Low float, medium relative volume, low float former Momo stock, and squeeze alert up 10% in 10 minutes. So if we actually click up here on strategy and on the bell, you'll see all the different strategies that are currently in the high day momentum scanner. And you could check to turn on your audio alerts, so you'll get a little ring when one of them is sending out an alert. So now if we look over here at our chart for Craig, what you'll see, and let me just move this. Why is this? This happened yesterday on eSignal. So on Craig, you'll see that that was at 11:51, and that was when it was spiking right here from 8 up to 880, which no doubt was a nice move. So while I didn't trade it, and perhaps I wouldn't have wanted to trade it, seeing stocks like that are moving is very helpful. It's important to see what's happening in the market because that's how we find new opportunities, especially on days where perhaps we didn't really have a lot on our gap scanner. If there weren't very many really nice gappers or anything that looked really good, then we can kind of say, all right, well, maybe we trade some of those at the open if we like them, or we just switch gears to focus on what's hitting the scanner. So when something is lighting up the scanner, as this is, I usually want to pull it up pretty quickly and see what's going on. I can check the news right here, although in this one, it doesn't appear that there is any fresh news from today. So this is a purely technical breakout, not a breakout driven by a clear catalyst. This is going down, and we'll go down to earlier this morning. So to go through our columns, we have time, symbol, price, volume, float. Float is colored in the same way as it is on the gap scanner. Relative volume, relative volume in the last 5 minutes. So this tells us how much volume occurred in the last 5 minutes versus a typical 5-minute period. So it's the same as relative volume on the daily, except it's relative volume on a 5-minute period. This is helpful for seeing stocks that are surging up right now with much higher than average volume. Then we have our percentage of gap. This tells us whether or not the stock was gapping up or gapping down. The change from the close, how much is up or down from the close. This gives us the link out to news. And then this is the name of the strategy, which strategy is triggering the alert. And the color on the row is based on the different strategy types. All right, so again, this is fairly straightforward just in the way it functions. New alerts are at the top of the window, and this will keep running all day long. It doesn't start until the market opens at 9:30, and then it ends when the market closes at 4 p.m. Usually when a stock hits the scanner, I'll pull it up. I'll check to see what the news catalyst is, but one of the things that I mentioned previously is the importance of knowing whether or not we're in a hot market or a cold market. In a hot market, I'll be a lot more aggressive jumping into things that are moving and squeezing, whereas in a cold market, I'm probably just gonna see things pop up and say, I don't think it's worth it. It's not the right time of day. It's too late. Like at this time now, it's too late in the day. The market's not hot enough. I'd probably just not really be interested in trading any of this stuff unless it starts to go really, really parabolic and the volume really increases. Again, not to get too far into strategy right now, as this is more of just a kind of breakdown of how these scanners work. So then we've got our halt scanner. So this will actually show us stocks that are halted right now and that have been halted during the day. So again, this is very similar in the way that this populates. We have a couple of other you could say, well, top gappers, top losers, top gainers, top relative volume. So let's move this over here a little. Well, I'll go like this. So top relative volume, I'll just close these, is a little different than the top gappers, right? Sometimes you'll have a stock that was one of the leading gappers, like COS, and is also high relative volume. But then we also have OXBR. The relative volume is 102.89. Now, OXBR was only gapping up 18%, as you can see back here. However, so it wasn't maybe one that I was really watching that closely when it first, when it first came up on the scanners. I probably was like, oh, I don't know, it's popping up. In pre-market, I don't think I was really looking at it. But then all of a sudden it starts to rip up. It's hitting our high day Momo scanner. And then I'm jumping in. And of course, the relative volume was pretty high on it. So COS, OXBR, EDSA, if you're going to look at spending your afternoon kind of reviewing charts, you're usually going to be best to look at the top 5 or 10 relative volume leaders. So that's COS today, OXBR, EDSA, VTNR, and PHUN, And, some of them are going to be more obvious than others. You can tell sort of the difference in price action between the lower float stocks and the higher float stocks. But again, this is our top list. So this can be helpful at the end of the day to refer to the top list here of the relative volume leaders to go back and study those charts. During the day, it could be helpful if you were away for a couple hours to come back and just take a peek at maybe you hadn't noticed OXBR, and maybe some of these would be worth watching on a better day for an afternoon move, a move into the close. But I don't think any of them are really set up necessarily for that right now, but you never know. Another scanner that you could look at is our top volume in the last 5 minutes. So this is showing us stocks in the last 5 minutes that have the highest relative volume. But some stocks like COS are going to probably be on this scan for most of the day, just simply because of the fact that the volume yesterday, or even the day before, a couple days ago, was 97,000 shares, and has just increased so dramatically in these last 2 days that every 5-minute candle is really high relative volume. But you could still kind of keep an eye on this. BYFC, that's one that we weren't looking at anywhere else, but it looks like, it is kind of grinding higher today. ASPL, it's 29 million share float, doesn't look that interesting. VTNR, we already looked at that. So this isn't really showing me anything particularly interesting right now. I generally would say the scanners that I'm going to be looking at the most closely will be Gap Scanner, pre-market, and then the High Day Momo Scanner and the Halt Scanner. And then once pre-market is over, I close that, and I'm just watching High Day Momo and the Halt Scanner. All right. So again, stocks hitting the new high. I think we've broken that down pretty well. And generally, when I see a stock hitting the High Day Scanner, my process is I check to see which scanner it's appearing on. Do I know the stock? Am I familiar with it? Is it a former momentum stock? Is it, is it electric vehicle stock? Is it something that I'm familiar with? I check the chart of the stock I'm looking at as per what we talked about in chapter 5 for really just the general strength, the daily chart, gaps and windows. Then number 4, does the stock have the potential to give me a 2-to-1 profit loss ratio if I enter it now? Can I get in and risk 100 to make 200? And then I would take positions as appropriate based on, really based on one of the strategies that we'll talk about in the pro classes, whether it's a half dollar, whole dollar, ABCD pattern, first candle to make a new high, etc. And just for clarification on the definition of relative volume, every stock has relative volume. It's the average volume of that stock over the last 30 days. So that's a different number for each different stock, obviously, but that's what we're looking at, the average volume over the last 30 days. So when a stock is trading on 10 times relative volume, it's trading 10 times higher than its average over the last 30 days, and that's certainly significant, and it's almost always the result of some type of catalyst, even if it is purely a technical catalyst, but usually it's a more fundamental catalyst, like news. But sometimes it is purely technical. Okay, so with that, I think you guys are all fully equipped to start using these scanners as you practice trading in a simulator, and we can continue on here to chapter 13.